Imagine waking up 5 years from today and checking your bank account. Instead of wondering how you're going to make it to the end of the month, you see an investment portfolio that's growing, an emergency fund that gives you peace of mind, and a financial future that finally feels under your control. Now imagine the opposite. 5 years have passed, but nothing has really changed. You're still working hard, still waiting for the next paycheck, and still asking yourself where all your money went. The surprising part is that for most people, the difference between those two futures isn't luck, a huge inheritance, or winning the lottery. It's the small financial decisions they make every single day.
The problem is that we've been taught two completely opposite ideas about money. One side tells us that getting rich is easy. Just find the next hot investment, start a side hustle, or discover a secret strategy that nobody else knows. The other side tells us that building wealth takes 40 or 50 years, so there's no point expecting meaningful results anytime soon. The truth lies somewhere in the middle. Building real wealth isn't an overnight process, but it also doesn't have to take a lifetime. 5 years is enough time to completely transform your financial life, if you focus on the habits that actually create wealth instead of chasing shortcuts. In this video, I'm going to show you exactly how to build wealth over the next 5 years, using practical strategies that ordinary people can follow. No unrealistic promises, no get-rich-quick schemes, and no complicated financial jargon. Just a simple, proven roadmap that can help you earn more, save smarter, invest consistently, and build the kind of financial momentum that keeps growing long after those 5 years are over. Because the decisions you make today won't just change your bank balance, they could completely change the direction of your future. Let me ask you a simple question. If someone gave you 5 years to completely change your financial life, where would you start? Would you try to earn more money? Invest in the stock market? Start a business? Or would you simply save every extra dollar you could? Most people think they already know the answer, but this is exactly where they go wrong. Building wealth isn't about finding one perfect investment or making one brilliant financial decision. In fact, some of the highest income earners still struggle with debt and live paycheck to paycheck, while others, with average salaries, quietly build impressive wealth over time. So what separates them? It's not luck, talent, or even how much money they make. It's a system, a series of small decisions that work together year after year. And once you understand that system, you'll realize that building wealth isn't nearly as complicated as most people think. The challenge isn't knowing what to do. The challenge is ignoring all the distractions that promise quick success and focusing on the few habits that actually make a difference. Now let's talk about something that quietly destroys more wealth than bad investments ever could, and that's lifestyle inflation. At first, it doesn't seem like a problem. You get a raise, land a better paying job, or your side hustle starts bringing in extra income. Naturally, you want to reward yourself. Maybe you move into a nicer apartment, finance a newer car, upgrade your phone, or start eating out more often. None of these decisions seem irresponsible on their own. In fact, they feel like proof that your hard work is finally paying off. But here's what most people don't notice. As their income increases, their expenses increase just as fast. Before long, they're earning twice as much as they did a few years ago, yet they still feel like they're living paycheck to paycheck. That's because every raise has already been spent before it ever reached their bank account. Think about it this way. Imagine two people who both receive a $1,000 monthly raise. The first person immediately upgrades their lifestyle and spends nearly all of it. 5 years later, they have a nicer car and a more expensive lifestyle, but very little wealth to show for it. The second person enjoys part of the raise, but automatically saves or invests half of it. They still improve their quality of life, but they also build assets that continue growing every month. Over time, that simple decision creates a huge gap between the two. The difference isn't how much they earned, it's what they chose to do with the extra money. One of the easiest rules you can follow is this. Every time your income increases, commit to investing at least 50% of the raise before you spend a single dollar of it. If you get a $500 raise, invest $250 automatically, and enjoy the remaining $250 guilt-free. This way, your lifestyle improves without sacrificing your financial future. Wealth isn't built by denying yourself every pleasure in life. It's built by making sure every increase in income doesn't immediately become an increase in expenses. The people who become financially successful aren't always the ones who earn the most. They're the ones who allow their investments to grow faster than their lifestyle. At this point, you've done two incredibly important things. You've focused on increasing your income, and you've avoided the trap of lifestyle inflation. But there's one problem. Even if you're saving thousands of dollars every year, that money isn't going to build significant wealth if it just sits in a savings account. Saving gives you security, but investing is what gives you growth. Think about it this way. Imagine you have two employees. One works 8 hours a day and then goes home. The other works 24 hours a day, 7 days a week, without ever taking a break. Which one would you rather have? That's exactly what investing does. Every dollar you invest becomes an employee that's constantly working to earn more money for you. While you're sleeping, working, or spending time with your family, your investments have the potential to keep growing. This is where the power of compounding begins. Compounding simply means that your money earns returns, and then those returns begin earning returns of their own. At first, the growth feels slow, almost disappointing, but over time, it starts to accelerate. Imagine investing $1,000 every month for 5 years. You've contributed $60,000 of your own money. If those investments earn a reasonable long-term return, your portfolio could be worth significantly more than what you put in. More importantly, you've created a foundation that keeps growing long after those first 5 years. This is why consistency matters far more than trying to perfectly time the market. Many people spend months waiting for the right moment to invest. They worry about market crashes, headlines, or whether prices might fall next week. Meanwhile, someone else quietly invests a fixed amount every month, regardless of what the market is doing. Years later, it's often the consistent investor, not the perfect market timer, who comes out ahead. The goal isn't to find the next stock that could double overnight, or chase every new investment trend you see online. Those opportunities may sound exciting, but they also come with much higher risk. Instead, focus on long-term investments that have historically rewarded patient investors. Broad, diversified investments allow you to benefit from the growth of many companies rather than betting everything on just one. Here's the mindset shift that changes everything. Stop thinking of investing as a way to get rich quickly. Start thinking of it as a way to buy future freedom. Every dollar you invest today is purchasing more choices tomorrow. The choice to retire earlier, travel without financial stress, support your family, or simply wake up knowing that your money is working, even when you aren't. That's how real wealth is built, not through one lucky investment, but through hundreds of consistent decisions, repeated month after month, year after year. Now we've reached the step that sounds the simplest, but is actually the hardest for most people: consistency. The truth is, building wealth isn't difficult because the strategy is complicated. It's difficult because the results are invisible at first. During the first few months, it might feel like nothing is happening. You invest a few $100s, your portfolio moves up and down, and your net worth barely changes. That's the point where many people give up. They convince themselves that investing doesn't work, or that they'll start again when they have more money. But what they don't realize is that every successful investor has gone through this exact phase. Think about planting a tree. You don't put a seed in the ground and expect it to provide shade the following week. For months, there's very little to see above the surface. But underneath the soil, the roots are spreading and growing stronger every single day. Wealth works the same way. The early years are spent building the foundation. Your investments may not look impressive yet, but you're creating habits, increasing your income, and growing assets that will eventually begin to compound much faster than you imagined. Let's look at a simple example. Imagine two people both start investing $800 every month. After the first year, neither of them feels particularly wealthy. The balance has grown, but it doesn't seem life-changing. The first person gets impatient and stops investing because the progress feels too slow. The second person keeps going, without trying to predict the market or chase the latest trend. 5 years later, the difference between them is already significant. 10 years later, it becomes enormous. The biggest advantage wasn't that one person earned a higher return, it was that one person simply refused to quit. This is why you should stop measuring your progress month by month and start measuring it year by year. There will be months when the market falls. There will be unexpected expenses. There may even be times when you can only invest a small amount. That's completely normal. What matters isn't being perfect, it's staying in the game. Every month you continue investing, you're giving compounding another opportunity to work in your favor. Remember, wealth is rarely built through one extraordinary decision. It's built through hundreds of ordinary decisions repeated over and over again. Choosing to invest instead of spending, choosing to learn instead of making excuses, choosing to think about your future instead of only today. These choices may seem small on their own, but together they create a financial life that looks completely different 5 years from now. So if you truly want to build wealth in the next 5 years, don't focus on finding shortcuts. Focus on building a system you can follow no matter what the economy is doing or what the headlines are saying. Increase your income, protect yourself from lifestyle inflation, invest consistently, and most importantly, keep showing up, because the people who succeed financially aren't always the smartest or the luckiest. They're the ones who stay consistent long enough for their efforts to finally pay off. So let's bring everything together. If you want to build real wealth in the next 5 years, don't waste your time searching for shortcuts or waiting for the perfect opportunity. Instead, focus on the things you can control. Increase your income by investing in your skills. Protect yourself from lifestyle inflation by saving and investing a portion of every raise. Put your money to work through consistent long-term investing. And above all, stay consistent even when the results seem slow. Because wealth isn't created by one big moment. It's created by hundreds of smart decisions, repeated over and over again. Here's something worth remembering. 5 years from now, you'll still be 5 years older. Time is going to pass whether you take action or not. The only question is what your financial life will look like when you get there. Will you still be wondering where your money went every month? Or will you have built a portfolio, developed valuable skills, and created financial momentum that keeps growing year after year? The choice isn't made 5 years from now. It's made today, with the habits you decide to build after watching this video. If there's one lesson I hope you take away, it's this. You don't have to become an expert overnight, and you don't have to be perfect. You just need to start, stay patient, and keep moving forward. Small actions may not seem powerful today, but given enough time, they can completely transform your financial future. If you found this video helpful, make sure to subscribe for more practical, no-nonsense advice on building wealth and achieving financial freedom. And I'd love to hear from you. What's the one financial goal you want to achieve over the next 5 years? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.